For years, gold and silver have been ignored, and now the largest banks in the world are recommending them. So that tells us that something has changed. There's been a shift. Let me show you. Bank of America lifts 2026 gold forecast to $5,000 an ounce, and it sees silver at 65. So this was in October, and Bank of America raised its price forecast for 2026 to $5,000 an ounce with an average of 4,400. Right now, gold's at 4,400, and then silver to 65 with an average of 56. Right now, silver's already at 65. So banks aren't early. And they're not going after narratives. They're not adjusting, and it's not speculation. This is more of confirmation. So when all the banks are green on things, it's not a new trade. It's a shift. It's adaptation. So gold and silver have been dismissed for a long time. Talk to anybody in the finance, banking industry, people with 401ks, IRAs, TSP accounts. They don't have any gold and silver. It's been completely ignored. This reversal matters. We've entered a new epoch, a new time, a new season. So it's important we recognize this and we get into it. With gold and silver on the rise, let me show you. This is from investing.com. It says, regardless of our title, gold is being back long with silver screaming strong. It reminds us of blending ostracizer precious gold with industrial copper and pressing puree. Of course you get silver. Don't call these people metallurgists. But either way, collect all three. Basically saying collect the metals. You need these metals. Gold reclaims the long bias while silver is accelerating higher. Let me show you these charts. This is an all-time chart of silver. This goes back to the 1940s. And it started accelerating here in the 70s. This is stagflation. And this is unprecedented. Nothing like this has ever happened before. Look at your gold chart. Again, all the way back to the price was fixed up until the 70s. And then after the 70s is when it started going up. That's when debasement of currency started. And it's just ripping. And look at, I mean, this has got to tell you something. And it's not too late. And yes, you can wait for pullbacks, but it's something that it needs to be, you got to start looking into this stuff. Look at this gold chart. This is amazing. You can see a channel. This is on if we go to a weekly, okay, this is a weekly chart here. And it rides up this channel, breaks this channel, back tests this channel, and now it's pushing up. And so now we're pushing up against this all-time high. And gold's about to make another leg. And the typical portfolio that people carry is a 60-40 kind of thing, stocks and bonds, and people aren't really allocating to gold or silver. And it doesn't take much. This move in precious metals doesn't require everyone to go buy metal. It just requires people that if they stop ignoring them, it's going to explode. So capital rotation happens quietly at first, and then it explodes. So I've been following this guy on X, this guy North Star. I highly recommend you follow this guy. He's been pretty on point. This is he has this capital rotation theory, and we're seeing everything flip bear, and that means it needs to be capital rotation into gold. This is what's coming. Give you another chart this guy had right here. So this is a cycle chart. So rotate into gold, stock market down, gold up. Rotate back into equities, stock market up, gold flat. Rotate into gold, equities down, gold up, etc. And because since 2008, no one has seen this, most people don't even know what to do with this. So it's not going to take a lot. This is what's happening right here. I mean, this chart goes all the way back to the 1940s. And look at this cycle. And you can see where this support line just broke right here. And this has never happened in most people's investing lives. I mean, I'm in my 40s, and the first time I ever invested was in 2008, and I learned the hard way. So most people have never seen something like this. This time, it's different. This is monetary metals. Let me show you the pattern of how this goes. So the pattern starts with gold. So on a gold chart, we can see a big breakout here in February of 24, where this next leg kicked in. February of 24. Then we can look at silver. And silver's big leg happened here in almost a year later, March of 25. So you've had this long consolidation period, and then this march up in this breakout here in March of 25. Platinum's the lagger, and it's the only one who still hasn't created an all-time high, sitting here at 1800, just shy of its all-time high of 2200. And this breakout occurs in June of 25. So this is just a rotation that when you look at silver, silver is used in all the electronics we have, all the defense weapons, all the missiles being fired all over the world. All of this stuff uses silver. Can we recognize that silver is both industrial metal and monetary metal? This is a super cycle that has to be paid attention to. I'm encouraging you to pay attention to this. This is unlike other cycles. So silver right now is doing something we've never seen before. It's not a replay of past cycles, okay? And it doesn't move slowly. So let me show you that chart again. It doesn't move slowly. Now, this is the current channel that it ran, broke this channel, broke the all-time high. It already touched 64 something dollars. A pullback into the high 50s over the next few weeks wouldn't shock me, and that would be a buying opportunity for myself to accumulate more. So this chart speaks for itself. Look at this all-time chart. It doesn't even fit. Right here at $47, $50, $48, $50 mark, that's the all-time high twice. And both times came crashing down. Something's different. This is a repricing of the global fiat experiment that we've had. This has been an experiment, and people are catching on. So gold is going to work as capital preservation. This is an opportunity to preserve capital. That's what people are doing. As currency debases, gold is not worth more. Silver is not worth more. A gold coin and a silver coin are the same. 1 ounce of gold and 1 ounce of silver is the same now as it was in 1959. It's still 1 ounce of gold. The difference is the dollar is worth less. So it takes more dollars to get 1 ounce of gold. That is an accelerated pace. Unless something dramatically changes and there's some policy change and the United States pegs gold, which could happen, and they say gold is now, this has happened before, gold is now worth $5,000 an ounce. Gold is now worth $50,000 an ounce. Whatever, if they were to do that, that's the only thing that stops this train. This train is runaway. And this is a 10, 15-year outlook of gold being 10, 15, 20, $25,000 an ounce. So gold's going to perform when the confidence in currency and fiat erodes. So this isn't necessarily going to make you rich, but this is going to help you from becoming poor. And we're seeing a divide right now. We're seeing this massive divide that started in 2020. It's been an acceleration where everything shut down and Walmart and Amazon and Target and Home Depot were allowed to stay open and everything else had to shut. And you've seen this massive explosion of rich getting richer and poor getting poor. And this wealth gap is exploding. And this is a reflection of that in the charts. So gold and silver have already done their move. Platinum is next. It's the only one of the three that hasn't made an all-time high yet. It's sitting here at 1800 on a weekly chart. It's running a channel. We can see a nice clear channel here, and we have support way down here. So I would imagine getting up above this, that this mid boundary is going to be acting as support. So anything here in the 1700s to 1800s through January is a buying opportunity for me. It's not, something is off. This is not a normal phenomenon. This is phenom for you, my friend Levi. This isn't normal. So have you heard of stagflation? So people begin to lose confidence in the United States dollar, so they diversify, okay? And no one wants to admit it right now, but the world, maybe with the exception of China, has all the makings of stagflation written all over it. It's not just gold, but other commodities and fiat currencies are losing purchasing power, and bank savings won't be able to preserve purchasing power, as most of the major economies have been cutting rates, including China. In a stagflation environment, commodities, particularly gold, should offer protection over some traditional finance assets. This is from the assay, I don't know, whatever, some investment. Gold reclaims the long bias while silver accelerates higher. So regardless of the title, you need to collect all three. That's what these people are saying. The inventories in China are at decade low, so there's a supply constraint as well. So the more the further down to this rabbit hole you go, you're going to find that there's issues with supply, that people are flying all over the place, and these large electronics and defense contractors, they need silver to produce what they've sold. So they're buying silver at inflated prices right now. So the market's overexcited and potentially overpriced. I said that there could be a little bit of a pullback into the high 50s, but I wouldn't really expect too much over that. But the inventories are low. It's just not available. So what's the debasement trade? This is how stagflation works. Stagflation is rising prices and slower growth and expanding debt. Do you feel like the economy is kicking butt right now? Let's find our friend Trump here, that everyone This guy seems to be delusional. Stock market just hit an all-time high, all caps screaming at you, all-time high stock market. The fake polls show I'm doing a great job on the economy and much more. And Edward Dowd, who I really like that guy, Edward Dowd. Is anyone with a brain advising this president? The economy, from what I'm seeing, the economy is not doing great right now. Sure, the stock market's up, but that's, I mean, this is I highly recommend you follow this guy, No Limit. Let's give this guy a shout. No, at No Limit Gains, and Edward Dowd at Dowd Edward. But this line right here is what this guy's talking about. This has to be rolled over. This is debt that has to be rolled over. And so this is going to come with higher interest rates. They've already announced they're printing more money. They're doing QE. It's not QE, but it's QE. And they've been lowering rates. This is a cycle that doesn't slow down. So for North Star, ignore this at your own peril. It's going to hit us between the eyes. And I said this last week that crypto's not looking good. So if I go to a Bitcoin chart, I was wrong on crypto. And luckily I sold up here. I sold in October and September. I mean, that's pretty good. But now we're in a downward channel. Touch the support level with this channel. And I would, again, this is non-advisory. I'm not advising anyone to do. I'm just explaining what I'm doing. This is a time to be patient, where what I'm doing with the opposite of what people are doing. Cash allocations have fallen to record low levels in Bank of America's latest fund manager survey. Few investors expecting an economic or markets downturn in 2026. Zero cash on hand. The Market Sniper, who I highly recommend, at the Market Sniper, says get some cash because it's coming. And I agree. So stagflation feels like cost of living increase, wages flat or go down, markets chop and potentially go down and even create deflation in the middle of inflation, and the confidence in the economy and the fiat currency erode. So this standard portfolio with stocks struggle, okay? Bonds fail, cash disintegrates, and real assets matter. Gold and silver and platinum. And so I showed you before, the rotation happened. It's already happening. People smart money rotating out of Bitcoin at $125,000, okay, in October of 2025. So let's see, where did silver go in October of 2025? October of 2025, you could have got silver for $45 an ounce. Ripped. So this is the move. This is the move right here from when? With this move. You tell me, where'd the money go? The capital rotation starts with gold. It started back here in August and even further. I mean, look at this ripper. In late 24, in early 24, and just rode, boom, you get a pretty big pop here. But really about August of 25, right around $3,000 an ounce, ripped. August of 25. Then silver. April, then platinum, June, breakout here in June. So it typically goes gold, silver. So if you look, these are ways to play. Let me show you this. GDX is a basket. It's an ETF of gold miners. So if you have a IRA or a stock portfolio or some kind of retirement fund, and you're able to pick some stocks in there, again, non-advisory, but if you want to play gold, this is a good way to play gold, GDX. And it's making it all-time highs right here. GDXJ is the junior miners. It hasn't made an all-time high yet. SIL, silver miners, almost at an all-time high. SILJ, junior silver miners, all-time highs. These are ways to play this. And a typical rotation goes gold first, then GDX and GDXJ, then silver, then SIL and SILJ. And anyone telling you that this thing is just starting in it's already over, I just disagree. Demand destroying events occur in this environment. I'm not predicting, I'm not prophesying, I'm just being cautious myself with a portfolio of capital preservation in gold, speculation in silver, not Bitcoin or cryptos. I do hold some cryptos. These are long-term investments, the majority of which I've sold, rotated, and cash. So this is where a portfolio, you build some cash for something that's going through. This is an example of a shift in 2026. So Barron's just dropped their 2026 stock picks, and there's a huge shift. Let me show you. So they're going Amazon, not growth. Okay. It's about scale cash flow. Okay. They're going to be a survivor. Bristol Myers Squibb, defensive move. Okay. Strong dividend. Healthcare, doesn't care about recessions. Comcast, beaten down. Okay. It's a value play. ExxonMobil. Okay. This is if everything breaks. Okay, this quiet compounder insurance. I know this company, Fairfax Financial. It's good. It's a long-term play. It's not a trader. Okay. Here's a growth play. Gambling. People will be gambling during an economic downturn. Shocker. Madison Square Garden sports scarcity. It's a unique asset. This is the contrarian bet that if everything doesn't collapse, this will actually be good. Visa, everything keeps going with Visa. Disney prints cash, okay? But this is the kind of shift that doesn't happen unless expectations change behind the scenes. Major publication rotate away from growth and into defense. It usually means one thing. They're preparing for slower growth, tighter conditions, or a drawdown. By the time retail starts positioning, institutions have already rotated. So you tell me in the comments, what are you bullish on in 2026? And I don't want to hear Palantir or Nvidia or the NASDAQ, right? This is where the rotation's coming from. So buying gold and silver miners today, according to Jesse Colombo, says it's like buying tech stocks in 2010. So this will be the greatest wealth generating opportunity of the coming decade, not tech or crypto, okay? Those are crowded trades. Who do you know that's talking about gold and silver? Capital rotation has occurred. The resistance has broke. This is a bear flag. It doesn't look good. It's time to pay attention. We're looking at, let me get out of this. We're looking at liquidity issues. That just means cash flow issues. Credit contraction. It's going to be harder to get a loan. Interest rates higher. Even though they're cutting short-term interest rates, long-term interest rates are higher. Housing prices, the interest rates on homes isn't going down. The confidence in the economy is being shaken. Okay. So when demand is destroyed because people are feeling the squeeze, all right, the squeeze is on. And if you're not feeling it, then God bless you. But everybody I know is feeling the squeeze, including myself. So this is why I'm starting doing these videos. I want to make sure that people are prepared and understand what's going on. So everything will sell off in a demand destroying event, whatever that is, some type of crisis that comes through. Doesn't matter what it is. Everything sells off. But what rebounds immediately are the metals, the monetary metals. So this is the place to preserve capital. And they're not liabilities. Okay. Stocks can become liabilities. So I don't think oil is going to be the play. I think monetary metals are the play. Let's go back to these charts. What does oil say? So on an all-time chart of oil, I mean, we're about the median, right? It's not even near an all-time high. So 08, all-time high, $150 a barrel. 2022, $125 a barrel. Okay. When that C19 thing happened, you could get oil for nothing. So some type of event pushes it down here. That's when you can buy oil, in my opinion. Again, non-advisory. This is only me. Okay. Just a guy, that really good looking guy on the internet with a YouTube channel. But oil prices can fall even in inflation. Okay. Oil depends on consumption. Okay. Growth in gold and silver depend on confidence. There's a big difference here. So this is a monetary phase, not a growth phase. This is a shift into monetary metals. Now, eventually commodities are going to have their play. Copper's ripping, platinum, right? Then you're looking at all these other things, beef and corn and all, if you want to buy commodities in general, yes, and oil, that's going to be a play. But the monetary metals is where it is, particularly right now and moving forward. This is not a trade. It's a capital rotation event that I've never seen before. I'm 47 and I've never seen anything like this before. And from everybody that I listen to, that I respect, that have been particularly right about most things and have helped me get through this past few years of navigating the madness that's going on out here. This is what's coming up. Gold preserves, silver amplifies. Okay, silver grows exponentially. Platinum will surprise people. And fiat debasement is going to accelerate. So I'm going to openly track this. We're going to revisit these levels. Okay. That's it. I appreciate you watching FX3. This was a finance, particularly motivated show. So if you find this useful, if you find this content helpful, I'd appreciate a like, a comment, a subscribe. You don't have to do them all three. If you do, that's great. But help that algorithm go. So I guess I'll see you on the next one. God bless you.